AT1 bonds disproportionately affected, of course, investors in the Asia Pacific. A lot of the valuations haven't snapped back just yet. Moving forward, though, can investors avoid this asset class if, in fact, this premium stays?
It's a huge opportunity cost to give up. So if you look at where AT1s are trading relative to senior debt, at a bank like HSBC, investors can pick up about 400 basis points. That's 4% going down the capital structure. For a bank like Bank of East Asia, that's 600 basis points. That's too much to give up, especially when you're trying to manage to a benchmark. So I think the opportunity cost is too high to give up and stay on the sidelines. And if you were to stay on the sidelines, you should have stayed earlier on and not when there's blood on the street.
Right. Sharnie, I'll bring you in because months before this started, you've been writing about this, the flows, the wealth flows into Asia, and really money chases yields, right? So what have we seen as far as flows from the mainland to Hong Kong into higher yielding instruments? Because this is really part of what underpinned the lack of liquidity in the banking space, for example.
Yeah, we're actually seeing a pickup in flows, and that coincided with the yield differential widening between onshore products and offshore products. So the most obvious would be through the Southbound Wealth Connect. So that's basically a program which allows the mainland investors in the Greater Bay Area to buy Hong Kong products. We saw flows in terms of sales in the fourth quarter jump 60%. And we actually think that that's going to pick up into 2023 as that yield differential continues to widen on Fed rate hikes.
Yeah, there we go. Speaking of Fed rate hikes, Francis, I'll bring you in on that. I mean, there's been a conversation recently over, I go to my bank and they don't want to give me higher deposit rates. So this competition for deposits, and how does this change the funding mix of the banks is the bigger question right now.
Well, obviously, many of the banks could face a bit easing the funding situation in Asia. We and the market, the bond traders alike, are still thinking maybe the Fed need to back off a little bit from its tightening stance because of the evolution of the current banking crisis. And that would be good for either wholesale funding or even deposit fundings in some of the local markets, Hong Kong, Japan, South Korea, and Southeast Asian markets.
All right. Now, Pri, I'll bring you back in. Just give us a sense in the Asia Pacific, how important are AT1s as a funding source? That's one. And when you look at Chinese banks, for example, which I understand are the biggest source of this, really, the issuers of this, what are the alternatives for Chinese banks if they don't want to issue dollar debt, for example?
So when you think about Chinese banks, they have been the most prolific issuers of additional Tier 1 capital in the world in the past 18 months, more than anyone else, and a multiple of our European banks have issued. Just to give you some stats, they've issued more than $40 billion worth of AT1s in the last year and a half. And that's a key source of capital for them, and especially as they kind of build towards meeting their bail-in requirements. But what's interesting with the Chinese banks is that as of late, since the war in Ukraine, they've been issuing exclusively onshore and replacing their offshore AT1s onshore, and the main buyers have also been a lot of state-owned enterprises. And that kind of helps them keep their funding costs low. And if you look at the onshore versus offshore cost of capital differential, it's about 2 percentage points, and that's a material difference.
Okay, before I bring you guys back, actually, I just thought about something. Japanese banks, for example, I mean, this is also a conversation they need to have, but they also need to worry about currency exposure here.
Yep. So Japanese banks, about 40% of their assets, or 45%, are foreign currency denominated. And 100% of their capital, especially Tier 1 capital, is yen denominated, and so that leads to FX risk in their capital. They manage the funding risk on the FX side, but not the capital side. And so I think they were kicking their tires when we met them earlier this month about potentially issuing dollar-denominated AT1s, and I think that might take a backseat at this point, because in Japan you can issue an AT1 right now probably for 2%. In yen-denominated AT1 versus maybe 6.5 prior to Credit Suisse, and probably even higher now. So I think from a funding perspective, that matters. But funding is not everything, as we saw. And with the FX going against you, you need to have the natural hedge, and that's what a dollar-denominated AT1 would do to Japanese banks.
Francis, I'm looking at the equity side to the story. How diverse really the equity prices have traded. It seems like the market's picking out the winners from the losers. I'm not sure if that's a good extrapolation of what's happening. What do you make of this massive divergence in share price performance across the region here for regional lenders?
Well, we followed 35 large cap Asian banks in the region, and we see there have been bigger price losses since Silicon Valley Bank's collapse on the 8th of March for HSBC Standard Chartered, 2 UK banks but with their business focus in this region, and 3 Japanese mega banks because these 5 banks are more exposed to many other Asian banks we follow. Other Asian banks, they may have more business exposure either in the home market or at the very least in the region, while these 5 banks are truly global and more exposed to the international markets. They felt an average 15% more, catching up with what we have seen for the group of European banks and US banks, 20-some banks in each of the regions. So for other banks, the declines are pretty moderate. And for Chinese banks especially, China's biggest banks, they gain a tiny bit throughout the process, and that would be the safest group of banks if you want to highlight.